While some would argue that the debt doesn't matter, I'm going to show you why the United States can never get out of its debt problem and why this is a real issue for you, the individual. You came here for the truth, so let me unveil that for you. In today's video, we are going to look at the debt circumstance, which is on top of your back, not the government. The government is an empty vessel to be filled with all of these politicians, these dirty criminals that are the ones that are trying to take what they can before their term is over. And you, the individual, got to carry all of that weight on your back. And it is becoming much more of an issue as time goes on. Yes, the debt does matter. The total number of debt, not really. More debt will be added next year and the year beyond. We know this to be the case. And of course, there isn't a way to reduce the amount of debt because the system itself is born out of debt. So we know this. This needs to be known, okay? But the problem here is how that debt is shifted from the public, the government, into the actual people and what they have to deal with. I'm going to show it to you right here. You can see a million simulations and one verdict for a US economy. Debt danger ahead. Bloomberg Economics ran a million forecast simulations on the US debt outlook. 88% of them show borrowing on an unsustainable path. You can't get away with this forever. You realize that, right? Like borrowing, yeah, oh yeah, we have the US dollar. We have the petrodollar and we have the big military. Therefore, we can get away with it forever and ever. But you got to realize something. These things are good to suggest, and certainly the United States has the strongest currency in the world. There's no question about it. Everybody, no matter what country you go to, will accept that US dollar. There's just one issue that you, the individual, if you're inside of the United States, you got to realize when the government is spending money, they are simply devaluing your currency because it goes out the window. You don't have productivity, you just have this level of devaluation that comes in many forms. Okay, so here it is. They talk about the debt to GDP ratio, and people have said like this magic number of 100%. When the debt to GDP ratio goes over 100%, that's when it's a problem. Look, I don't know. You could see that some countries are still going strong, seemingly, when it goes above 100. But I think for some people, they just need to understand that the debt becomes burdensome on the average individual. It doesn't matter if it's Greece, it doesn't matter if it's Spain or Italy or Portugal, it doesn't matter if it's the United States, because people have to pay the bill. You got to pay that bill. And the bigger this becomes, the more, like, think of it like an earthquake, right? It's going to be more intense the bigger it gets. Like if it goes up in the Richter scale, right? Well, that's the issue. It is more of a problem as debt compounds. You got to look at this. Fed's Kashkari says 2024 rate cuts under threat if inflation continues to stall. And so this is where things get real difficult because everything has been reliant on interest rates going lower. And if they stay high, then we have a problem. That debt, as you see it today, the debt is already unpayable. You're looking at $1 trillion in the United States, $1 trillion just in interest payments. And so if they're going to leave interest rates high, then that burden continues for longer. The longer it goes on for, the more things that will break along the way. When you have money for free, well, nothing really is a problem. Hey, everything's good. We are in the, this fantastic unicorn and rainbow zone. But when you get to these real points where you have a little bit of interest to pay on stuff, well, then it releases all of that and we get to see who is really basically pushed to the edge and their margins are too thin or what have you in these different companies. This is just talking about, you could see it here, markets believe that the rate cuts will not come as early as they said that they would, and we're going to have to see how this all comes out. The bond market's freaking out as a result of it. Look, these fluctuations, don't pay attention to them, of course. Don't pay attention to the minor fluctuations, but understand that rate cuts were what the market was betting on since last year. By the way, they thought they would never come in the first place. But now those things keep getting pushed further and further and further. Powell says US Fed has time to assess the data before deciding to cut. So now they're making these claims that maybe we don't have to do this. Kashgari saying this. And in fact, all of them are kind of saying, okay, well, we're good right now because the economy is going strong. Inflation has come down. Let's keep it where it is. Why would we go and increase interest rates when things are doing so well? Nothing's breaking, according to Powell, according to the Fed. We don't have to worry. And remember, they actually want to create a crisis. This is important. And as a result of this, gold plows to a record high after Powell's remarks. And so you'll see how this works, but it is pretty clear that people believe that the US dollar is not exactly that safe haven. They would rather have a little bit of their cash being put into gold instead. Okay, this is paper gold, we know, but at least it shows you what has happened. This is 2,300 at its peak anyway. It hit, which is a record high. So we see it is fighting, of course, that price. It's moving up, it's moving down, but in general, traders have been bidding that up. In the case of Steve Eisman, who is from, if you don't know, from the book and the movie, The Big Short, all right, it was the character that Steve Carell played. He said that the Fed shouldn't cut rates, risks creating a stock market bubble if it does. Okay, I don't. it's like, did you ever turn the news on, Steve? What do we have today? Not a bubble. Okay, gotcha. Okay. Here we go. What's next? This is huge. I think people need to realize this. Everybody who's been on my channel since 2019 knows about this. If I say to you right now, September 17th, 2019, put it in the comments. What am I talking about? It's 4 letters. September 17th, 2019. Put it in the comments. 4 letters. What am I discussing here? I want to see if you guys know. I'll try to reach out to all of you that do. What happened? September 17th, 2019. 4-letter word. And get to the bottom of it and try to understand how frail and fragile this system actually is. And it was exposed right at that moment. Here we go. The funniest people are those who think that 2020's crash was caused by, well, you know what? The banking system was already collapsing September 2019, forcing the Fed to start repo interventions like in 2008. The system only collapsed when the Fed pulled the repo away. 2023 is the same game plan with the BTFP and the OCE. So basically just goes into this, and the links are in the description if you want to check this out. But I wanted to just point this out here because there have been many interventions since the financial crisis. Many times they've gone in there. They went in 2019. They went in 2020. Again, they were buying mortgage-backed securities. They were buying corporate bonds of companies like Apple. They were doing things that really went under the radar. Of course, we've seen things they actually do not have the authority to do. One of them being when they were purchasing the corporate bonds of companies like Apple. They are not allowed to do that. Oh, but they found this little loophole and they did it through the treasury and blah, blah, blah. Yeah. Okay. Whether you do it directly or indirectly, it doesn't matter. Okay. You're not allowed to do that. Everybody cheered them on. Everybody cheered them on. They want that. They want more and more intervention. Even the people that are supposedly telling you and the Fed, these guys love the Fed. Okay? All right? Those people on YouTube saying, and the Fed, they love the Fed. and you just look at what they actually say in depth, and you realize that the Fed is a group of unelected criminals there to take everything from you. Once you start to dig into their history, you will realize that this is not a joke. I am not exaggerating this in the least. Once you understand, it's not Jerome Powell, it's not these other guys, it's the institution itself. Study the history of this institution. You could read the book, The Creature from Jekyll Island, as a simple way to look at that. There's documentaries, there's all these things. But just know how this institution got started, who was involved in it. And then what I did, which is a little much, but I read basically all of the history and like who was at every single meeting, all these books. There's a book by Murray and Rothbard called America's Great Depression, which you can read about all of the Fed's involvement there. There's the book called The Case Against the Fed, which is incredible as well. I think that's Rothbard. So this just goes into it, and you could see that. I mean, I've read probably way too much in this, but now I feel confident in telling you. I feel very confident. The new magic number for retirement is $1.46 million. Here's what it tells us. There's no single formula for how much you need to save for your 401k, but at the same time, they're telling you you need $1.46 million. Now, I think that this is $1.46 million is going to be nothing in the near future, but $1.46 million. Why? Because they say, hey, you're going to get 7 to 10% in the stock market going forward. That's going to be fantastic. You're never going to lose money. I mean, it's crazy. But here we go. So we got to understand what's happening here. People don't have that, right? The vast majority of people don't have that. Now, maybe they can sell their property and then retire. People will say, yeah, I'll just sell my property. But then what happens here, we've been told that there's this big shift from the baby boomers that are going to sell all their property, and then they're going to give it to their kids. By the way, don't forget about the fact that you got to split that in between your kids. And so, yeah, it's $1 million, but now it's split multiple ways. Inflation takes hold. Are there taxes on the way out of that? Anyway, but here we have it where you're not going to be able to reap the rewards of that. Your kids might, some of it. But the people, so are they gonna sell the property and downsize? Okay. Are they gonna pay capital gains on that? I can't charge $20 for a Happy Meal. McDonald's franchisee responds to California's new fast food wages. All I'm showing you here is that costs are rising. People do not have what they did before, and the debt is burdensome. Once we start realizing that, we can get to the real heart of the matter, okay? The currency is being devalued. The Federal Reserve, the central banks around the world are all doing this in lockstep, and that's really critical to understand. So what can you do? Of course, number one, if you're outside of the US, start earning US dollar, okay? Because immediately you're going to make the differential. The US dollar still strong, okay, when we look at it internationally. If you're earning US dollar, could you be earning British pounds? Yes, you could be. You can be doing the same amount of activity, but suddenly making more money in a different country. You got to be able to have a business that operates online. This is another thing I talk about all the time. You've got to have skills that other people don't, that are sought after. Build your skill set, learn things, okay? I think it's important. I've got videos all on this, how-to and solutions playlist on my YouTube channel. Hit that thumbs up if you appreciate it. The fact that I talk about solutions. It's not always the problems, but guess what? You got to make it, and you got to have the patience to make it to the end of the video usually. Most people don't. So thank you for that. Hit that thumbs up. If you want more details about how to actually do this currency diversification thing, please link in the description. Click that. Top of the description, themoneyGPS.com/live. That's where I talk all about that. Okay. Find out about it, and don't forget to come back tomorrow. Take care.